Alibaba is the Amazon over in China. They do predominantly e-commerce. It's almost like a carbon copy of what Amazon's done here in the United States and around the world. Alibaba has taken that business model and created it in China. They're achieving great success. They had their earnings this week, and I wanted to go over the company and share with you my process in investing, show my analysis on Alibaba, and let you know whether I'm going to buy, hold, or sell additional shares of Alibaba. My name is Victor. I'm an MBA graduate, have a lot of business experience, and I like sharing my process and analysis on YouTube. Do me a big favor and like my video and subscribe to my channel if you want to see content like this. Now, let me tell you about Alibaba. Sound investing, good investing involves following a consistent process, going through a process of determining whether you want to buy a stock for the first time and own that stock, or maybe you already own the stock and you want to reevaluate it and say, hey, should I continue to buy more shares, hold it, or sell the stock? And for me, this is my process. This is my scorecard. It involves 4 questions, followed by a decision whether I want to buy, hold, or sell. And the first question is, do I want to be part owner in this company? Do I like the industry? Do I think the management team's doing a really good job, or are they doing a bad job? Debt, is it under control and less than 3 times EBITDA? I want to discount the stock. The reason I invest is so that my investment goes up in value. The best way to do that is buy low, sell high. And based on the answers to those questions, I buy, hold, or sell. So this story of Alibaba is easy to understand. I'm an American, and I've observed how great Amazon has been. I'm a big Amazon customer. I was a stockholder in Amazon, but I sold my shares not too long ago. I love Amazon. Well, Alibaba does exactly what Amazon does in China. So I believe in Amazon. I believe in Alibaba. It's a solid business model of providing a lot of products to consumers. They order on the internet and they get delivered. Like Amazon, Alibaba has a variety of businesses, including a cloud business. They do logistics really well. And even Americans are buying from Alibaba. You can order stuff on Alibaba's catalog and have it shipped here in the United States. So very easy to understand Alibaba. I definitely want to be part of the industry because e-commerce is just really a part of life now. And so I want to be part of the industry, part of the company. Alibaba announced their earnings and they were very good, starting with 14% growth in revenue. If you compare the Q2 number compared to the Q2 number of 2022, it's a great job. They grew their profitability, really expanded it. Income from operations, 70%. Growth in EBITDA, 27%. EBITDA margin, 32%. Growth, or increase from 2022. So that expansion is so impressive. Net income, growth expansion of 63%. So just awesome numbers from Alibaba on their growth in revenue and expansion of profit. Alibaba's balance sheet is really solid. They have more cash, short-term investments and other treasuries than they do all debt. In fact, they have $57.8 billion of cash, short-term securities and treasuries net after their debt. So their balance sheet's very strong. Cash flows came in where I expected them. This is really consistent with the run rate that I expected. They don't have to put too much capital into the business. Net, they're above $5.3 billion in free cash flow, which is right in line with where I expected the company to come in with cash flows. I believe Alibaba's stock price is discounted 80% currently. And I get that number by following 2 methods of valuing the company. The first method is valuing the free cash flows I expect from the company into the future. And the other is looking at their earnings per share. Let's take a look at cash flows first. So the current cash flow run rate that I'm going to go with is roughly 27.4 billion, which is taking 2022 and increasing it by 10%. I'm going to grow those cash flows in years 2 through 4 by 10%. So it gives us a nice run rate here. And then long-term growth is going to be at 3%. all cash flows beyond year 4 are going to be 471 billion. And all these cash flows collectively, I'm going to discount using a net present value calculation. And I'm going to use 11% as the weighted average cost of capital. That's much higher than I used on Amazon. If you look at that video I produced, it's just the international risk. This company is operating in China, different reporting requirements and so forth. But looking at the net present value of all these cash flows, it's $377 billion. I'm going to add the cash and take away the debt, and I get an equity value of $441 billion for Alibaba. The market cap's 234, so it offers a 90% discount currently on the stock using the free cash flow method. Looking at earnings per share is expected $8.36. They may do better than that, but I'm going to stick to that number. And that was a forecast that I've been using for a couple months. PE 20, I think that's reasonable. If you look at Amazon, geez, that's really high, like 80. This one I'm going to stick at 20, 3% growth. And based on those figures in this calculation here, you can study this calculation if you like. I get a discount of 61% in the stock. So blended, I take 2 parts free cash flow, 1 part earnings per share. I get an 80% discount on Alibaba currently. So revisiting my scorecard, my process for Alibaba, I want to be part owner in the company. I think owning an e-commerce company is a good idea. Being diversified into China is a really good idea. And the industry and both the company are very attractive to me. This management team's doing a great job. They don't really have debt. They have more cash than they have debt. And there's pretty good discount available on Alibaba. So I'm going to continue to buy shares in Alibaba. I would say that Alibaba is one of those investments where I'm very careful with it. I've been an Alibaba stockholder for some time, and the stock, goes up and down, but it doesn't trade as naturally as like an Amazon. So it's not one of my biggest positions. It's a small to medium sized position. So looking at where Alibaba stock has traded not too long ago, about 2 years ago, the stock was above $300 per share. And it really dropped from mid 2021 to late 2022 by more than 75%. And my value on the stock is $163 per share. So it offers up a nice discount currently, but I could see where I want to be an investor. Here's the zone of investing for me. And I've been buying at these levels, and I'm glad I'm up on the stock, and I'm going to continue to buy at these levels. For the year to date, the stock is up 7.7%, not keeping up with the S&P. But to me, that just signals that, hey, this stock's undervalued. The market's probably going to start reacting, and the stock price is probably going to go up. All right, so that's my video on Alibaba. That's taking you through my process that involves the 4 questions and then making a decision. I encourage you to follow, find your process, discover how you like to invest and what your comfort zone is, and then stick to a process that's consistent, and that way you can learn from investments you make, and when you make money and you see a stock price go up in value, you can study, okay, what did I do right? And, how could I repeat that? On the flip side, when you lose money, it's also an opportunity to learn something, study what went wrong. What did I get wrong? What surprised me? And how can I improve from that? Over time, if you continue to improve, you're going to be wildly successful because just over time, as you get better and better, you're going to make more and more money. But you can't get there if you're just inconsistent. If you're just randomly, throwing darts at a dartboard, not sure you're going to get there. But if you follow a process, I'm optimistic that you're going to get to being a very good investor. Now, do me a big favor and like my video, provide comments. I'd love to hear from you, and subscribe to my channel. If you'd like to see more content, please subscribe. It'd be great to have you as a subscriber. And with that, let me wish you good luck investing in 2023.